Crypto market has been quiet, but behind the scenes, there are a ton of projects, blockchains, and categories that are quietly gaining traction. I'm starting a new series where every week I go through the latest on-chain metrics to help you understand what's going on in the crypto market. Now let's get into it. Starting from the top, let's look at the overall market health. And for this start, I'm going to use DeFi Llama, and DeFi Llama just released this new homepage where it includes all of the top market level metrics for DeFi. So it has the deposits, decentralized finance applications. It has the stablecoin supply. It's got total fees being paid. It has the volume on decentralized exchanges. It has ETF flows. So all these things that you're tracking on chain to understand DeFi activity, you can do so on this dashboard. And by the way, I am the head of growth for DeFi Llama. But let's take a look at it now and understand exactly where things are. So TVL is basically back to just above where it was in November. It's down to where it was last summer. So it's retraced all of the gains from December. And, you know, that sounds pretty bad on its face. However, it's worth pointing out that the most common token in DeFi is Ethereum, and Ethereum is actually below its price from last year. It's actually below there. So even though total amount deposited is down, that kind of hides the fact that you have, for example, more stablecoins in supply and deposited into DeFi. You have more Bitcoin that's moved into DeFi, and in other types of assets as well, like real world assets. And for example, if you look at the actual stablecoin supply here, this is just since the start of April, but you can see that it is growing. And if we zoom into stablecoins, and by the way, I consider this to be one of the highest value metrics because it's tough to fake since most of these are backed by fiat, then we can see that since October, the total stablecoin supply has grown by around $60 billion since the start of November. So remember, we're back to the level that TVL was at around the start of November. Since then, it is up by, again, about $61, $62 billion. So you've just had like incredible amounts of money that are actually entering the crypto ecosystem. And even over the past week, it's up $1 billion. Past 30 days, it's up by $3.56 billion. And remember, this is real money most of the time. It's backed by cash or short-term treasury bills, vast majority of this. All right, so let's go back to looking at the overall metrics. Another important one to look at here is going to be DEX volume. And if we look at decentralized exchange volume and we look at it by week, I covered this in my video last week where I talked about waning altcoin demand. Then you can see that pretty much week after week or month after month, you have a decline in DEX volume since January. And even in recent weeks, it seems that for now, the decline may have halted, but it's sitting right around where it was in October. And honestly, it would not surprise me if, as things get quiet, we saw this dip further. And the reason being is that what is there really for people to trade right now? The meme coin narrative is completely busted at this point. Most meme coins are not reaching a very high market cap, and I know that Base is trying this thing with coin everything and trying to make these content coins. Vast majority of those are not reaching very high market cap. Even the top ones are not reaching the sorts of levels you had a few months ago, and the sorts of levels that you need to attract people who are actually willing to deposit a lot of money into the space, right? You need to generate some FOMO, and that's just not happening. So it wouldn't surprise me if we saw DEX volume decrease even more. And the other thing is, I think that crypto actually has a chance to seize on a real narrative here. Today, I'm recording this on the 21st. Stocks were way down. I think $1 trillion wiped off total stock market cap. Crypto's actually up today. And I think part of it is that crypto's in this weird spot where people aren't sure whether to treat it like a tech beta or to treat it like digital gold, and specifically to treat Bitcoin like digital gold. And you see gold is actually doing great, right? People are flocking to safety. This should tell you everything you need to know. NASDAQ down, gold up. Bitcoin little bit of both. Today it's up, past few weeks it's up, but overall down. And that's because Bitcoin's value, you can think of it as some combination of beta to tech stocks, as a digital form of gold, and as well as a proxy for total global liquidity, since Bitcoin is ultimately existing as a currency that's not backed or related to any one particular nation state. And so you can think of Bitcoin's value, that's how I think of it, as a combination of those three things. And so it shouldn't be surprising now, after it led a lot of the way down from tech, now it is starting to move a little bit more with gold. But that still leaves crypto in this weird place. And as a result, it wouldn't surprise me if DEX volumes continue to drop, since there's not as many interesting altcoins to trade at the moment. There are, however, a few narratives that actually I think are worth paying attention to, despite all of that. First of these is going to be real world assets. So look at this here. This is right here on the homepage. We have from April 7th, $10.45 billion in real world assets to today, $11.29 billion, up 8% in 7 days. And in crypto, we're used to these explosive moves, but if you take a step back, 8% in 7 days is pretty incredible. And then you zoom out further and you say, oh, wow, like this is a really fast growing category. And I keep talking about this category because it keeps being true that something increasing by, what is this, 15x since the start of 2023, roughly, even more if you go back a full 3 years, something increasing by that amount of multiples in just a couple of years. Normally, you would say, wow, that's like an incredibly fast growing category. It's only because people get these blinders and short-term thinking from being used to cryptos exploding every day. But if you have a little bit of a longer time frame, then I think the trend is pretty clear on this. And then if you look at the actual top real world asset tokens, you have a mixture of traditional finance institutions, which are predominantly tokenizing treasury bills here. You've got BlackRock, you've got Franklin Templeton at number 6. You've got other things tokenizing treasury bills, and then you've got gold. So now you've got tokenized gold. Remember, gold is doing great. You've got tokenized gold starting to play a role in crypto through real world assets. So that's the first narrative that I'm looking at. The other one is going to be Hyperliquid. So look at this. TVL is actually almost back to its all-time high here. DEX volume has been kind of quieter on Hyperliquid recently, again, as the whole market has been dropping. Perps volume has been more steady, and that's the core business of Hyperliquid. And then if you actually look down, I think this is maybe most important. Tons of applications are being launched here. So you've got the original Hyperliquid app. I'm looking right now on the Hyperliquid chain, Hyper EVM, but now you've got Felix, Hyperland, Hyperfi, Kitten Swap, Hyperswap. Keep going on, right? You've got all these, and a lot of these are growing really fast. 42% in 7 days, 14% in 7 days, 28% in 7 days. This one's shrinking, 50% in 7 days. You've got a whole bunch of these are growing really fast. So I actually think that there's probably going to be quite a few DeFi opportunities here if you can spot which of these applications have the talent behind them, and they're shipping quickly enough, and they actually have an interesting enough product that they'll be able to attract users. Typically, the go-to way to bet on upcoming chain would be to find the decentralized exchange that people are using. Now, Hyperliquid, I think the risk here is that it's possible their spot DEX just wins, but maybe one of these smaller DEXs, like maybe this Kitten Swap or Hyperswap. I don't know anything about these, so please do your own research. But maybe one of these actually is able to use some combination of incentives and listing smaller tokens to actually reach escape velocity. But given that they have to compete with the main Hyperliquid spot DEX, that's going to be a little bit challenging. So I'll be looking at some of these other applications as well. Another place that I see some money flowing, and I saw this through DeFi Llama's bridging dashboard, is Unichain. Net flows of plus $53 million over the past 7 days. This is Uniswap's new chain. Now, the major application on it is, of course, Uniswap. You see fees paid and TVL, both of them, Uniswap is winning. And then the other top apps are all apps that are on other chains as well. Stargate Finance, Venus, Compound, most of them pretty small. But already there's a good number of apps that are starting to launch here. So I think this is worth paying attention to at a minimum, because it's got the backing of Uniswap, and not only do they have a ton of users, they're crypto native, and they should have some understanding of how to build a product that people will actually want. And I think if they do this successfully, that'll be a pretty strong precedent that other DeFi applications will start to, major DeFi applications I should say, will start to look more closely at having their own layer 2s. Another interesting trend that I wanted to note is fees. So these are the top fees by application. And one thing a lot of people have noticed recently is ETH BTC is doing horribly. Look at this right here. It's back to levels that were most recently seen in January 2020. So it's lower than the COVID crash, lower than before DeFi summer, lower than way lower than post FTX, right? It's just down only. And one of my theories on why this is, because I'm not just saying this to, insult ETH, but one of my theories on why this is, look at the historical top applications by fees, okay? Ethereum is consistently one of the top ones. Over the past year, it's still number 3, even after the information I'm going to share with you in a minute. Still number 3. Okay, so let's look at the past 7 days. Where is Ethereum? All the way down, number 20. Producing about as many fees as Binance Smart Chain, Orca. It's producing less than Phantom Wallet, less than Radium, less than Aave, less than Hyperliquid, less than Axiom, which I barely know anything about, less than all these other applications. And I mean, it's producing 1/5 the fees of Pumped Up Fund. And what does it mean that Ethereum is producing so much fewer fees, right? Fewer fees should be good, right? I think the reason is that if you view these layer 1 tokens as in part, a commodity, part of their value is that you need to buy them to access this decentralized network. Well, if a lot of Ethereum activity has moved to layer 2s, and then maybe fees have come down on the network as well due to other reasons, then people need to hold a lot less Ethereum. And you also have the fact that other layer 1s like Solana are now occupying more activity. So people need to hold a lot less Ethereum if they're paying fewer fees, right? So if in the past they would have been paying 20 million fees total per day, now they're paying 3 million fees per day. The result is a lot less demand for Ethereum. And I think that that's being reflected in the price. And if we go back to the chart of fees and look at it now by month, we can see that the amount of fees has just completely fallen off recently. Now you can see it better, completely fallen off. April is only 2/3 over. So far it's around 14 million. Even if you say it's going to stay this high and proportionally out the rest of the month, it'd be lower than its low from August. I mean, it's probably going to be at a level that we haven't seen since mid 2020. So the fees have just completely fallen off. And Ethereum has pretty good tokenomics because it's got the burn value accrual, and you need it to access the network, and it's used widely in the Ethereum ecosystem. But that burn is also going to be lower if there's a lot fewer fees being paid. So I think that's part of why Ethereum has been underperforming so much. There are other reasons as well, related to especially the fact that it's got a lot more competitors than it used to, and some issues with the community's confidence in the leadership behind the project. But I think the fees are actually a major part of it. If you want to get more on-chain metrics like this, as well as the latest crypto news delivered to your inbox, be sure to check out my newsletter, newsletter.dynamodefi.com, delivered every Monday with recommended readings, on-chain analysis, and more. And for more videos like this, be sure to like and subscribe. Until next time, this is Dynamo DeFi.